Welcome back. With recent high flyers, tech and discretionary now becoming the laggards. And while much has been made about the rotation out of tech and into small caps, my next guest says if we're in an AI bubble, it's still early days, and the Mag 7 will likely continue to gain over the next 12 to 18 months. Joining me now is Samantha McLemore, Chief Investment Officer at Patient Capital. And Samantha, it's great to see you again. Welcome back.
Thank you, Kelly. It's great to see you. Thanks for having me.
Yeah, you've got stocks and names and thoughts in all the areas that I think our audience is going to want to hear about. Let me just start with perhaps an unexpected place for some, which is Nvidia. I mean, you were involved with this stock actually pretty recently. What are your thoughts on the valuation and what's going on kind of more broadly there?
Yes, it was an unusual purchase for us. Normally, we like to buy names down, not up, but I think we saw anchoring in Nvidia. So obviously, Nvidia's results over the past year have been astounding, tripling earnings. And coming into this year, it was trading at only 25 times forecast earnings for the next year. People were worried that it was the next Cisco and that earnings weren't sustainable. When we looked at the business model, we didn't think it was just a hardware business. We thought it was hardware, software, platform dynamics, and we thought it could perform over the next 25 years more in line with Microsoft, which implied a value much higher. So we've paid $550 pre-split. We thought it could easily be worth $900.
Wow.
Now they've continued to beat earnings, so we think it could be higher, but it's hard to make a real case that it's undervalued in here. We still think it can earn market-like returns.
So it's kind of just a hold for you now.
Yeah, we like to let our winners run and hold it. I mean, we can still get higher values if you believe operating margins are going to be, anywhere in line with current.
Chip stock investors saw a sharp decline in share prices yesterday, with many portfolios turning completely red. Why did this happen? Well, it was largely due to geopolitics and some remarks made by U.S. President Donald Trump, the 45th, which served as a dire warning to both Nvidia stock investors and investors in other chip companies. Why did Trump's remarks set off this market reaction? And what should Nvidia investors do with their shares moving forward? Let's find out in today's video. But first, if you want to stay up to date on Nvidia news and the latest happenings in the stock market, you can subscribe to our channel as we post updates about the biggest changes and catalysts in the markets. So click the bell icon if you don't want to miss the newest market updates. Now back to today's video.
We're also going into day 3 of the RNC. A lot of people are talking about the quote-unquote Trump trade. How much of this rotation into other names do you think is part of that Trump trade? How much of it is just many portfolio managers are over-positioned when it comes to tech?
Well, it's hard because you were left behind. If you didn't own Index Weight Plus, it was very hard to beat the S&P 500, which is the main benchmark. So I think you're overweight. I think you could see some profit taking, but I think a lot of investors and a lot of portfolio managers are going to look at the tech trade and say, look, this is where we see growth coming from, and we still think it's above market growth, and we want to hold these names. As for the Trump trade, I mean, you've seen a lot of that get priced in the last week. I think the big one's going to be tariffs in China. Obviously, J.D. Vance has some pretty strong opinions on China. And so for us, that's what we're looking at, who's exposed to Chinese revenue. I think we still would support Taiwan. Some of this stuff, you got to realize it's an election year and that you're going to hear a lot of crazy things between now and November. And I strongly do not think you should position your portfolio at things you hear during campaigning, because that's often not.
The recent declines in Nvidia, ASML, and TSMC stock prices were caused by reports that the Biden administration was considering enforcing a broad crackdown on companies exporting their chip-making equipment to China. Additionally, remarks made by former President Trump in an interview suggesting that Taiwan should pay for U.S. defense and that Taiwan accounts for nearly all of America's semiconductor business further soured sentiment in semiconductor stocks. Many chip stock investors fear that, should Trump win the presidency, he will not be fully committed to defending Taiwan in the event of an attack by China. Taiwan continues to be a major player in the global semiconductor industry, leading with a staggering 68% market share. It is also home to the majority of the most advanced semiconductor chips in the world. As a result, chip companies, many of which are either based in Taiwan or depend on the country for supply, saw a sharp decline in their share prices. However, this isn't too surprising, given that Taiwan-based TSMC is NVIDIA's primary supplier, and that the firm's reliance on TSMC is a major concern frequently brought up by analysts and investors. It is clear why Trump's remarks are detrimental to the company. As per financial expert Dan Nistet, Nvidia paid the chipmaker $7.73 billion last year for its services, which accounted for 11% of TSMC's revenue. Therefore, investors in Nvidia stock should not be concerned. Let's find out. Hello everyone and welcome back to Investing Tutorial. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
Because now.
Well, the focus could end up being on any and all equipment from major chip making or chip equipment providers. As you say, yes, those restrictions, they're already in place. So at the end of last year, for instance, we saw major players like Tokyo Electron, you can see that big slump there, ASML in the Netherlands as well, essentially restricted from selling some of the most advanced technology to China. What hasn't happened, though, is the servicing or the maintenance, because the likes of Tokyo Electron, ASML, they've continued to maintain the equipment that Chinese companies already own. And the importance of that really just can't be understated, because if you don't service chip equipment, then it can actually stop working within a few months, definitely within a year. And so that's an issue for the US, because if you've got those companies like Tokyo Electron, like ASML, that keep maintaining their machines, then essentially you're continuing to enable China with its chip-making ambitions.
All right, so with that in mind, how could the US go about doing this?
What they could impose is a measure called the Foreign Direct Product Rule, or FDPR. It's essentially a rule that puts in place restrictions or controls on foreign-made products that use even just the tiniest amount of American technology, which is why I said basically any and all of equipment could be targeted by the FDPR. What sources are telling us is that this sort of idea or plan is being touted or discussed with officials in Tokyo, The Hague, if Japan and the Netherlands don't tighten their own measures on China. The US, of course, in a very tricky position, though, because there's also that question of how much are allies going to be listening here when you've got the US presidential election just.
Even putting aside the geopolitical tensions, there are still many risks associated with doing business in Taiwan. For example, an earthquake earlier this year forced TSMC to halt operations for a day. However, according to Jensen Huang, CEO of Nvidia, the company feels completely safe relying on Taiwan. He stated that he has had numerous discussions with Nvidia's Taiwanese suppliers, which gave him a sense of security. He also reassured reporters and investors by stating that Nvidia is diverse through multiple fabs at TSMC, and verified that Nvidia plans to source from the TSMC facility in Arizona, which will begin production in the first half of 2025. Thus, Nvidia's supply chain is highly resilient and diversified, and investors who have been following the company for a while would know that Nvidia is working hard to diversify its supply chain. For example, the company has outsourced chip packaging to companies like Intel and Samsung, which may help it become less dependent on TSMC. In fact, there are many more reasons for Nvidia to diversify than geopolitics. The demand for TSMC chip on wafer on substrate has outpaced its production capacity, the company announced last year, and it committed to doubling capacity by the end of 2024. In conclusion, we can't deny that a Chinese attack on Taiwan would undoubtedly harm Nvidia, but the company is doing everything it can to prepare for such a situation if it ever happens. With that in mind, let's talk about the positives surrounding Nvidia and why investors should ignore the current volatility. This means that if Nvidia wants to meet the insane demand for its chips, it needs to find more suppliers, and the company definitely recognizes this. However, first of all, thank you for watching the entire way through. It takes a lot of work and time to create these videos, so if you liked it, please hit the like button and subscribe to the channel. Your support will greatly aid in our growth.
About the concentration, I think, of power and production manufacturing of the world's most advanced chips in Taiwan, particularly from one company, that's TSMC, which accounts for a huge proportion of the most advanced chips in the world. Now, these comments from, I think, President Trump you're alluding to are interesting. There's two things I want to pick up on. He says in his comments in that Bloomberg Businessweek interview, they took 100% of our chip business. Now, what he's referring to is a trend over the last, let's say, 15 to 20 years where America is once very, very advanced in the manufacturing of chips. But then a certain trend occurred, which was what they call this fabless model, where American companies were designing chips, but manufacturing is difficult. And you saw Taiwan in particular begin to pick up the manufacturing. So if you're a company, you design a chip, you don't have to manufacture it yourself. You can outsource that, contract that to TSMC. And that's how TSMC and some of the other Taiwanese chip firms became so big. But it's also the reason why American tech companies have thrived. An Apple, Nvidia, Microsoft would not be able to do what they do without TSMC. And imagine these companies now had to invest billions and billions of dollars in advanced manufacturing of equipment. You imagine these margins we look at from Apple and some of these other companies, they just wouldn't exist. And so there are two parts, I think, to when President or former President Trump says that the chip manufacturing has moved out of the States. Yes, it has done, but it's exactly that trend that has allowed so many of what are the world's largest firms now, American firms, to thrive and be.
Every day seems to bring a new analyst upgrade for Nvidia stock, and these analysts highlight the ongoing demand for the company's microchips and processors that drive AI applications and models. Beyond the company's AI chips and processors, analysts say Nvidia is likely to also benefit from growing sales of its AI servers. What has Wall Street so bullish about Nvidia is not only the soaring demand for Nvidia's chips, but also the speed at which the company is advancing its technology. So, despite the recent pullbacks in the company, analysts predict that Nvidia will consolidate before rising again. There were many significant events for NVDA in the first half of this year, including the company's share price more than doubling, reaching a $3 trillion market capitalization, and splitting its stock on a 10-for-1 basis. In June, the company unveiled its next generation of AI chips, named Rubin, which arrive after the company previously announced its Blackwell line of microchips in March of this year. The company said that it plans to release new AI chips every year rather than every 2 years, as was previously the case. And this will definitely help it maintain its leadership position in the AI chips market. Since the company's upcoming Q2 earnings report could be the catalyst that sends the stock higher, it's not surprising that the stock has taken a break after so many significant events. However, what do you think about Nvidia stock? Is it a buy at the current price? If you would like to know what firms like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. We'll see you there. Please share your opinions with us in the comment box. Don't forget to tell us what your valuation is for NVDA.